We will stand on principle, or we will not stand at all.
Thank you, everyone, for joining. This is another episode of Principal Discord, here this time with Matthieu from Consensus. So, Matthieu, how are you doing? Thank you for joining us.
I'm great. Thanks for having me today.
Okay, so Matthieu, can you just explain to the viewers a little bit what you do at the moment and what you are up to at this time?
Yeah, absolutely. So I'm working at Consensus. I'm Consensus CBDC lead globally, and so working on designing the products that will help central banks to build CBDC. We are currently running a couple of projects with central banks around the world, which is really exciting, and putting all this together in within Consensus objective and strategy.
We will be mainly discussing CBDC's objectives and how, in your panel, the technology applies to that. So the first thing I wanted to ask you is, what do you see as different types of CBDC's implementation? And the second question would be, do central banks need a CBDC at all?
Yeah, so there are two major types of CBDC. The first one is wholesale CBDC, which is used across banks for interbank settlement. And the second one is retail CBDC, which will be used by individuals to pay friends and family, pay bills, or pay at merchant stores. Initially, central banks were mostly focused on wholesale CBDC, experimenting it with digital assets, like tokenized financial assets. And the more we see the time pass, the more they are looking closely at retail CBDC, because they see this huge potential, which is both a potential and a risk of retail CBDC, with projects like Chinese CBDC, but also Libra, and the significant growth of stable coins on public blockchains. And so central banks are considering offering an alternative to those privately issued payment systems, which is quite important for them, because if all private payments, as cash decrease, if all private payments become owned by private and foreign entities, it might be a very huge risk for central bank not to have the individuals having access to any kind of central bank money.
Right. So in other words, what you're saying is that they're kind of being pushed by the private sector to innovate. And so because of that, they are embracing the technology, but there is some risks for them. So do you see any of them trying to have the approach of regulating and shutting it down altogether? Or do you see that the natural thing is rather to join because it is something you cannot stop? What's your understanding of this?
One thing with central banks compared to startups is that they take this issue very seriously, and they are really doing proper assessments of the pros and the cons before racing into CBDC. So today, some of the most advanced projects are like in China, in Sweden, in the Bahamas, and Eastern Caribbean, but they're really taking it carefully, and will most probably do a number of pilots to test the approach and test the different capabilities of the technology and assess the impact on the financial and monetary stability. Because obviously, if you decide to change the financial infrastructure to a new one, which is, I believe, much more efficient and resilient and brings much more possibilities, it's great, but they also have to consider what will be the impact on all this amount of money and financial assets that are currently running on the existing or legacy infrastructure, such as RTGS and everything. So they will do it very carefully, but over the last couple of months, I've really seen a significant acceleration of the interest from all central banks, but also from other stakeholders, including banks, World Economic Forum, IMF, and all supranational organizations to facilitate a dialogue across all those stakeholders.
So I am going to step back a little bit on the principles of things, right? Central banks, by definition, are centralized. And we would think that blockchain technology are more fit to a decentralized system. Isn't there an antithesis there that comes together where it says, well, maybe you do not need a decentralized system if you're a central bank? What's your take on these sort of questions?
Absolutely. So one thing which is interesting to look at is that all, maybe except China, but let's say 90% of the CBDC projects in the world are currently using blockchain, actually. And I think the reason why all those projects are using blockchain is that it's because it is the best technology available today to build this. The reason why it's the best technology is that even if central banks centrally issue the money, they are actually within a distributed network. And whether it is for wholesale CBDC or even retail CBDC, we believe in this two-tier distribution model where the central bank will issue centrally the CBDC and then distribute it to regulated entities like banks, large retailers, payment service providers, who will after that distribute it to the end users. It doesn't mean that the end users will have some kind of account at the bank, but thanks to blockchain technology, you can have those banks, those intermediaries, who will play the role of distribution of the CBDC while making sure that the CBDC is truly owned by the individuals. And if for any reason the central distributor goes down, the end users can still use his money by going to another operator and asking him to process his transaction. It's a bit similar to telco a couple of years ago, where you were stuck with your telco operator for your phone number, and when you changed telco operator, you had to go and meet and change your phone number. But now, it is fully transportable, and I think it's one of the benefits of the blockchain.
I think that
you use intermediaries. Yeah. So just one thing: you use intermediaries, but you are not locked in with those intermediaries, and I think this is very powerful.
Right. I think you're actually answering a next question I was going to ask you about the banking system, where you would not want necessarily to disintermediate completely all banks, because that would basically cannibalize the banking system business, and therefore everybody would choose to have an account with the central bank rather than with the retail banks. So it's kind of like a federated consensus, if I understand well, where some trusted players would play as nodes who would be the ones verifying, but in terms of transportability, it would go from one vendor to another, or bank to another, or node to another. Is that a correct assessment?
Yes, absolutely. So here we are mostly speaking about retail CBDC, which I think is one of the most exciting part of the CBDC. And just maybe a couple of comments. So it is already possible to withdraw massively your money from the bank account. It's already possible to go to the ATM and withdraw cash and take your money out of the financial of the banks. So banks already have a risk on bank run, but they mitigate it with regulation, which will also be possible with CBDC. The other thing is, even if CBDC is not launched by any central bank, we already see this emergence of stable coins and other new means of payments who carry the same risks of bank disintermediation on central bank. And so I think it's really important for the banks also to look at the reason why individuals are considering withdrawing their deposits from those bank accounts. And I think one of the main reasons is that in the past, banks have offered package services for the individuals, and individuals really did not have a choice. And now with the technology, we see newcomers offering great services which are really focused on better individual user experience. And so we are changing the paradigm from central banks saying, hey, you have to bring your money to me, to new entrants who say, hey, I can offer you great services. And the choice is actually quite easy for the individuals to make, I think. So it's really important for the commercial banks to consider this.
I agree absolutely that what you're saying is basically that the more a competition of money you have, the better the quality of the money and the services that come with it will normally naturally evolve into better service for the customer. And so that provided the customer has a choice, then the free market would decide that. But one of the worries about central banks issuing the money, so far they had the monopoly on money. Okay, it seems like increasingly they don't. As a consumer, the first question that obviously come in mind, and I think you probably had it a lot, is privacy, right? So what about privacy? Would you trust more a central bank? Would you trust more a private sector initiative? How do you see central banks tackling that privacy issue?
Yeah, so I think in terms of trust in the value of money, there is no doubt that central bank money is far less risky than commercial bank money. Central bank money is mostly in reserves and some very liquid and secure assets, while commercial bank money is used to finance a number of projects which are very, which bring a lot of value to the individuals and enable a lot of investments, but they are also very risky. So in terms of security, I think central bank money is much more secure. Privacy, it's a very important topic and taken looked at very cautiously by the central bank. One thing is that the technology is actually mature enough to enable private transfers while making sure that the transactions are valid. Without going into the technical details, there is this technology called zero knowledge proof. It was a Turing Prize in 1980, so it's been 40 years now, and it's really mature enough to be used in production, and it allows operators to process transactions to make sure that those transactions are valid and that there is no double spend, while not seeing the details of these transactions and being able to analyze all this data. Yeah, so
but you would
I think
still
the technology
have
is
ownership
available.
rights in terms of, you would still have ownership rights in terms of somebody somewhere can decide who can look at all transactions, and who are the angels who are going to decide which transaction to look at or not. And with great power comes great responsibility, but then with great power comes great pressure to also use it to your own benefit.
Yeah, it's true. So I think with
Should
blockchain,
anybody has that power?
I think with blockchain and the zero knowledge proof technology, you can actually enable strict confidentiality and make sure that it is impossible for anyone to visualize the details of the transaction. So it is feasible. It's called zk-squared rollups, for instance, to make private transactions very scalable. The thing is, there are still some benefits for having visibility, for instance, in terms of KYC, AML, and terrorist counter financing. And so it is important that they can see, and we can actually design a system in which it is impossible for anyone to visualize the details of the transaction if the transaction is small enough, and make sure that the central bank and or some regulating entities are capable of visualizing the transaction and act upon them if they are illegal, for instance. And it is very important in our digital age to make sure that transactions are not illegal. And I think a lot of central banks would not create cash today if they had the choice. I mean,
right.
Yeah.
And that's maybe also why there is a big push for a cashless society in many countries. But is this a good thing? You know, the question is, as you said, some regulators to look at the transactions. Should anybody on principle be able to have that power of looking at anybody's transaction?
Yeah, I think so. I'm a pretty conventional guy, and I trust in our system. I think that central banks and regulated entities should be able to have this power because, again, making sure that we don't use this infrastructure for illegal purposes is a core requirement. And I think that what's great with this technology is that it will simplify their work and create boundaries, because until now, when they had the information, they could do basically everything with it without any kind of control. And here with blockchain and programmability, you can actually create lines of codes that make sure that the transactions are compliant for 80% of the cases, and just leverage your regulated entities for the 20% reasons. So basically, you use the technology alongside the people and the regulated entity to make this infrastructure a better place for everyone.
From a consumer perspective, if you had the choice between an absolute centralized power giving money, and then on the other side having a private, very transparent code from Satoshi Nakamoto or an unknown identity. Well, first of all, it's like a little bit like the MP3. It doesn't mean that it's because it's illegal that it won't be used, right? And then who are the angels who are going to decide what is legal and what is not, right? One of the problems with modern money is that it is increasingly being politicized in many levels. One, it is politicized in terms of trade, meaning some people can be cut off the SWIFT system. We've seen that with Iran and with other, which is at the end of the day, it's the people who suffer. And then there is also others forms of politicization of money in terms of the government having an incentive to monetize the debt. So why, since 2008, 2009, you've seen an increasing distrust of institutions. Why should people trust more central banks? And why should central banks be incentivized in allowing other forms of monies?
It's a complex question, but I think that, so at Currencies, we are working deeply and very closely in public blockchain space, in DeFi, and we are really committed to it. I think there are benefits with the two. Obviously, all the innovation that we see in public blockchain is absolutely amazing, and we definitely see the value of this. On the other side, I think that for mass adoption, we need those regulating entities, and all people do not distrust financial institution. And again, I think the technology can help with bringing more trust. And what I love to see in the coming years is actually those two worlds coming together for one better place. And I'm sure we will learn a lot from the DeFi space. I'm sure we will learn a lot from the lessons learned in the current infrastructure system, which has been running for so many years now. And I really believe that we'll reach convergence between the two. And that's one of the things we are working actively on at Currencies.
Well, that's very diplomatic, I would say. But tell us, to wrap it up, tell us a non-conventional view that you would have concerning CBDCs.
Yeah. So in a crypto-focused podcast, I'm not sure if it's really unconventional, but I think it's really important for the banks to acknowledge all this innovation and the transformation that is currently happening with payments and embrace it. Because if they don't, they will just really be disintermediated, and they cannot just continue to say, hey, do not create CBDC, otherwise people will take their deposits out and we won't have any more money to run our activities. I think they really have to take a step back, identify what are their strengths, what are their weaknesses. They have a lot of strengths, which they do not really monetize today. For instance, all their local agencies, all their compliance capabilities and processes. And I think they have a lot of strengths, but they really have to take a step back and understand where they fit in this new infrastructure.
So basically is, decentralized to the risk of cannibalizing yourself or die. Is that a good assessment?
Yeah, it's a good summary. I like it.
All right.
I'll reuse it.
Pretty good. You have my permission, no problem. Now the other thing is, I want to go back to principles, because you're talking about public institutions and all that. The PBOC, public entity, because that is a central bank owned by government. Most Western central banks are private institutions, correct? So in a way, there's not really anything new under the sun. The question being, is there really a separation between the state and money today? As we saw separation of state and religion, we haven't really seen the separation of state and money, where there is central banking institutions that are supposedly independent from governments, whereas actually right now you see none of this, particularly with COVID, where you see central banks basically purchasing bonds. So do you think we are in a free market capitalist society today, or there is still improvement? And do you think that will last? Or do you think there is a trend towards centralization?
Maybe my answer would be not fully direct, but I believe that the government role is to work on making the world a better place for individuals. And I think they work hard for this. It's difficult, and they're not always successful. But it's really about putting all the pieces together to make sure that individuals are more happy, that they find jobs, they have enough money for their parents and children, and all of this. So I trust a system. I trust a system in which you have centralized parties who are focused on delivering better solutions. I think we are at a point where, thanks to digital, we can have services focused on very specific services. So until recently, we had those banks who had package services. We had governments who were handling everything from a very, very high point of view. Like when you had a king, the king were able to decide everything. I think the more we go, the more we'll see some kind of decentralization, where you have dedicated entities who will make sure that what they are doing, that they are best at doing what they do. And it is absolutely unique with money. Until recently, money was really handled by central banks and commercial banks. And here we already see the emergence of companies like Revolut, Lydia, who really are transforming how we pay. Do you realize the difference between sending money to a friend with a bank transfers and with Revolut? It's a no-brainer that Revolut is much better. So yeah, I think I believe in the granularization of the services, but still I believe that we need regulated and trusted entities to run some of them.
Okay, so thank you very much, Matthieu. I hope we're going to have another occasion to discuss more about those. And also, I would invite everybody to like and share this video if they like what they heard, what they see, and also to visit all the services that Consensus is providing and the mission. I think you're doing a fantastic job at democratizing this, both on the public and the private side. So thank you, everyone. Any last words for you, Matthieu?
No, thanks a lot for inviting me. Thanks for the kind words about Consensus. And we're really doing our best to bring this technology forward in the next few years, to see what will happen in the next few years. I think it's really exciting what we are doing right now.
We will see. Thank you again. And thank you, everyone, for watching. And don't forget to subscribe, share, and support. And see you next time.
We will stand on principle, or we will not stand at all.